Hello, everybody, and welcome to the webinar. Thank you very much for bearing with us there for a couple of minutes. We were just setting up and had a couple of minor technical difficulties, but it should work now. Welcome to our Scalping Entry Exit Strategies webinar for FX Majors. This is, of course, the Learn It Live webinar series. My name is Thomas Atkinson from FX Evolution. I'm joined by Tyrone Abella. How are you going, Tyrone?
Hi, good, thank you. Welcome everyone to a semi-lockdown Victoria. Yeah, looking forward to getting into scalping with entry and exit strategies for FX Majors. We get asked about this a lot, and it's one of the most important things, understanding where your entry and exits are, even on the smaller time frame. So we'll jump straight into it, and yeah, we'll definitely check out some live markets today as well.
All right, great to have Ray here. Also, Ali. We'll answer your question in just a few moments, Ali. Let's just quickly go through a few webinar, pre-video things here, Ty. It's important for everyone to understand that any of the information contained in today's session is generic in nature and, of course, for educational purposes only. And the information will not take into account your personal objectives, financial situation, or needs. This information is not to be construed as an offer, recommendation, or solicitation to buy, sell, or participate in any particular trading strategy, or to be seen as investment advice. Now, Tyrone, as we always mention here on the webinars and on the group, is that Pepperstone has some great tools, doesn't it, for traders? And one of those is, of course, the Pepperstone Telegram community. I really like this community. You can join it by the link there. There should be a link in the chat as well. If you see it, click it. If you're not already in there, definitely get on in. And we also have our own trading Discord as well. If you're interested in joining that one, we'll post a link a little bit later so you can check that out as well. But basically, they provide different things. Pepperstone's one is always providing you with the most up-to-date information to do with the markets. And obviously, there's a little bit of a community in our one, which is just kind of goes hand in hand. So what are we going to be covering today? Well, as Tyrone mentioned, we get asked all the time, scalping is the most popular thing that people do. Scalping, day trading, they blur the lines a little bit. So how do people actually enter and exit into scalping opportunities? Are there certain ways that we might want to be market adaptive to those? We'll be discussing those using charts today in the live markets. The other thing is we'll be doing, of course, the live market analysis of some major Forex pairs. And then we'll be taking a look at the different timeframes and those entry and exit points. And we have, of course, a Q&A with our team throughout today's video as well. So if you have questions, feel free to ask them while we're going through this. No question is a dumb question, as I always say at Tyrone. I remember once, a long time ago, I worked in a computer shop, one of my first jobs, and someone came in, you probably don't care about this, guys, but someone came in, they were using the mouse, and they said, it doesn't work. And I said, why? And they were using the mouse upside down. It was one of those magic mice. Remember the old Apple ones? They said it goes the wrong way. I said, you're using it upside down. The point of the matter is, she said, you must think I'm dumb. And I said, no, I just think that you've got room to learn. And I bet you should never made that mistake again, Ty.
Yeah, no, that's right. Some of those mice can be a little bit deceiving, especially those Apple touch mice. So we'll forgive her that one.
Whenever you're scalping, Ty, it's really important for us to understand economic news. And today's no slouch on that one. We have, of course, CPI coming out in, I think it's only a couple of hours, actually, 8:30 a.m. ET, which is New York time. So that should be 2.5 hours away. We'll see the core CPI data. That's something that's going to move currencies. Now, if you're scalping and you're not aware of these red high impact news events, which is just any kind of Forex, you can search Forex economic calendar, I'm sure it's going to come up in Google for you, then you're not really probably scalping correctly, because these things can do a lot of damage to your account when not taken into account, can't they, Ty?
Yeah, 100%. If you're not aware of these, it can blow out what could be a really good setup. And realistically, if you are playing into the news and you don't want to be trading the news really at the best of times, but if you are trading unaware of what may or may not come out, you really are gambling. And you want to take the gambling element out of your trading, of course. You need everything in your favor, really, and you certainly don't want, as much as news can push it in your favor, it is a 50-50 bet most of the time. So you really want to be avoiding that sort of risk, and definitely check the news. It only takes a second, and you can jot down the important stuff every week in about a minute on a Monday, and then you'll be set, and you won't be caught by surprise. Very, very important, especially for the short time frame trades. They're probably the most important, really. The longer term ones you can get away with going through news, because your stop loss, of course, can actually last through it. So that's the important thing.
One of the other important things to decide on when you're starting to scalp is obviously what pairs you're going to become a master at. What time frame are you going to want to trade? And more importantly, where you are in the world. Now, during market opens is often where people like to get into a little bit of scalping action. London Open, of course, is a great one and a great choice for many Australian traders, for many, of course, European traders, and even Asian traders. It's one of those things where you could get I'd come home from work, I guess, in Australia, and you could potentially be able to catch the London Open and catch that volatility, that spike in the Monday, Tuesday, Wednesday, Thursday opens for the pair. Ty, we used to be big fans of doing that, weren't we? We used to put down about 2.5 hours, usually start around half an hour to an hour before the London Open, doing your analysis, get your support resistance in place, get your ideas for the day in place. And of course, the pairs that you'd be trading around that time would be things like pound, euro pairs, and euro pound, euro yen, those types of ones, because that was to do with that open. And it's really important to understand that, isn't it?
Yeah, once Frankfurt opens and the market starts to move, it generally sets up throughout that period. And then, yeah, London's where all of the action's at. Now, the thing about doing it on a consistent basis is actually understanding what the market does in those timeframes. Because if you're new to it and you start looking at London opens, there's a really good chance you're going to get faked out at some point, and it does happen a lot. But when you become familiar with trading that particular time frame, I think that the moves actually get quite easy to predict. And I think tonight's a lot about understanding the take profit and stop loss zones, because really it's about understanding what the market is likely to do in the time frame that you're trading it. So it's a really, really important aspect, especially when you're trading a market open.
So yeah, 30 minutes to 1 hour before is something you want to do. And you'll also want to understand what we call a top-down approach. Now, we always talk about this time. We talk about how it's important to start the highest time frame and then work down through the time frames. We also want to be able to recognize a trending or range-bound market, super important when it comes to scalping. And we want to use and utilize the lines, the bars, and the candle charts. Never fall into the trap of just using the candles, which most people do, because what the line is and the bar charts are actually telling you is something that's the same information, but you can interpret it slightly differently and make slightly better informed decisions on that. So when it comes to really scalping and all of those things, we want to use the multi-time frame analysis approach, and we want to make sure whenever possible, we're trading or scalping into the actual trend itself on the higher time frames. Now, Tyron, we fell into this mistake not trading with the higher time frames. In fact, I think when we first started, I'm not sure if we ventured out past the 1 hour chart. Did we ever venture out past the 1 hour chart? I don't believe we did.
Yeah, 1 hour was such a long time frame. It was ridiculous.
Oh, yeah.
Like waiting for a 1 hour close, like you're serious. Like we were sitting there trading, minute and tick charts. But believe me, when we quickly learned, it took, and you know what, we learned the hard way, and we obviously want you guys to avoid this, that it's better to work from the top time frames down. Even if you are trading a 5-minute chart, it's really, really important to understand what the 1 hour and the 4 hour are doing, because that is where the market momentum lies. And you always want momentum in your favor, no matter what time frame you're trading, especially when you're looking at short, distance trades like scalping. You definitely want that momentum in your favor.
Let's come in with one of our first strategies and one of the first kind of entry point strategies that you can apply very easily. Now, this is a 50 SMA here in the image that you'll see on the screen, simple moving average for anyone that doesn't know. You can add moving average, you can add, of course, simple or exponential. Now, generally in most trading, we like exponential on the smaller kind of moving averages. And then as we get out higher and higher, maybe like the 200, we might go a simple moving average. Many of you guys would know we like 20, 50, 200. They're our favorites. But when you're talking about that higher time frame, I have like a system, and Tyron and I use this quite a lot, and that is that we can recognize certain things occurring. So let's say we go out to a daily time frame. Let's assume this is a daily chart, okay? Now you'll say, what the hell's that got to do with our 5-minute, 1-minute charts? But bear with us, we'll get into that in just a second. So if we have a 50 or a 20 moving average being the mean reversion, we might see a reoccurring event where this is very obviously to everybody an upward trend. We're seeing a series of higher kind of peaks, higher troughs, and clearly some bullish action. Now you might see a first touch and then a support being found, and a second touch and a support being found over this daily. Now, what this is important to do is not only would we want to be scalping certain different zones in here, but it gives us the opportunity that when it comes back down to this zone, let's say we start the morning and roll out of bed in Frankfurt Thai and we're feeling good and we're ready to trade the market open, and we see it at the third point of touching on this daily time frame. This would be really excellent, because what we can do is we can start to say, okay, we believe that we're in an uptrend. The power of going with the bulls, the power of going with the market is actually very powerful here. Then we can look also to starting to see, is there some type of turnaround that's happening on the smaller timeframes down here, the 15-minute, the 5-minute, the conventional scalping kind of timeframes, and of course down to the 1 minute. And when we see certain things like our, I guess you'd almost call it, it's not patented, but obviously our lightning bolt concept here, Ty, where we've got a trough, we've got a peak, we've got a higher trough, and then a higher peak concept here. This is very powerful when spanning around here.
we call
it the lightning bolts. I guess an uptrend or a downtrend probably not not necessarily patentable, but yes, it's our lightning bolt exactly. When we see that at this zone on the smaller time frame, how powerful is that? Just that basic technique.
It's extraordinarily powerful because it means that the market momentum is in your favor. And look, the great thing, probably something that's probably not touched on as much when you are scalping. Look, at the end of the day, when people look at a trend and they say, all right, I'm going to go for glory on it and I'm going to enter on a short and sharp pullback and I'm going to ride it long. That's not scalping, okay? Remember that if you are scalping, you're going for a predetermined set target. You're not just seeing where the market takes you. That's not scalping, that's swing trading. So what you want to be doing when you get these opportunities, these pullback opportunities offer you not only a great entry point, but they offer you also a great exit point for a scalp, because the previous peak of the move before it came down and touched the moving average is a very clear take profit level. So you can see that's right there. They're your logical zones of where it's going to go to very, very quickly. So remember, when you are scalping, you're going with a predetermined target. You're going for 20 pips or 30 pips or whatever the market is going to allow you to do. When you see a trend like this and you're seeing the pullbacks, the market has already pushed past a certain level. So it's done all the hard work for you. So when you're entering on this pullback, the easy pips are the ones that are going to get to the previous peak before it came down and touched that 20 zone. And that's what scalping is all about, going for the short and sharp moves and actually scalping and taking those pips out of the market, not trying to ride a trend. Because if you're doing that, all you're doing really is scalping an entry. You can't really call that scalping because you could be in for days. No one can really predict how long a trend can last. All we can do is actually work with it. So when you are scalping it, you want to take your what we call the easy pips. And the easiest pips of all are the ones where the market's already predetermined the level that it can get to without a lot of trouble.
Yeah, so what Tyron's saying is you don't want to buy here and then be longing this thing all the way through here. I mean, that's not the idea of a scalper. The idea of a scalper is that you do use multi-time frame analysis. You recognize that you might be in a longer term uptrend and you're meant to be in and out and in and out and in and out. But what you will do is you will have a bias towards, of course, in this case, the buy side. Now, if the trend was on the downward slope, which it probably would be after it got through this 50 SMA over here, Ty, then we would look only for shorts. This one powerful concept of understanding upper time frame, especially daily 4-hour swing, in terms of what the trend's actually doing, helps you not make counter trend trades. And counter trend trades are probably the biggest failure of the 95% of traders, or I don't even know what the stat is nowadays, Ty, 90%, 85% of people that really don't make it happen in trading and investing.
Yeah.
And a lot of that
that's what people want to go for. People are fascinated by the counter trend. And there's no need. We learned really early, like we made these mistakes for you, right? So don't get stuck into trying to reverse the market. Let the market do what it needs to do. Work with it, especially. That's extraordinarily important when you are scalping. Very, very important.
So simple moving averages explained. Look, I know this is a bit of a beginner's webinar as well as we want to go into the more advanced complex idea. Of course, when we're talking about SMAs and we have a 10 or a 20 or a 50 Ty, what we're doing is we're getting 10 different readings from the last couple of candles. So of course, in this case, it'd be the 10 periods. If it's a 1 hour, it'd be going back over 10 hours, and it'd be dividing it by 10, and that would be how it's moving, isn't it, with a simple moving average. And EMA would be putting more emphasis on the last couple over here, so the ones that have been most recent price action. And that's why generally a scalper will prefer the EMA or faster moving indicators. That's going to be one of the ones that they're going to be looking at. So Ty, let's just quickly go into the live charts here for a second. and we'll actually bring up some things that have been going on recently. And one of those things, of course, many of you are aware, is this big short that's been happening in the euro US dollar. Now, if you had recognized the short and you had recognized it on even a 2 hour over here, should you have been buying the euro US dollar, let's say today? So let's go over just some multi-time frame and break down from the weekly down so that we can come in as a scalper for the day and have a bit of an idea of whether we should be looking to buy or whether we should be looking to sell, et cetera, et cetera. So let's go back 24, 48 hours ago and think about this chart. So first off, I see this chart and I look at it on the weekly, and I don't think anyone would be saying, oh, we're in an uptrend in the last couple of weeks. Would you say?
No, absolutely not. There's no way in the world.
So that's our first step. I mean, it's that simple. Does it even physically look like it's going up or down the weekly? Now, again, it may not make sense right now, but it will. Then we scroll over here to the daily and we start to do what I would like to usually do here, which is to start analyzing the chart using a bit of a line chart. Now, I'll do this usually just to get a bit of an idea of key support resistance levels. You'll notice in the middle, what the line chart shows us is the close prices. So here's all the close prices, and you can see the closes coming straight through here. And you've also got closes, supports becoming resistances straight through here. And then we've got support here and support here. So all our lines are set very simply using the line chart. Then we move over to the candle chart and you'll straight away start to see some interesting interactions. So let's go back a few days ago and we're at this point over here. Now, with these types of interactions, these rejection style candles, would we again be looking mostly to do scalp shorts, Ty, based on what we're seeing here?
Yeah, absolutely, because we're getting the price action actually determining what the market actually wants to do. Like, remember, we're on a daily chart here, so every one of these candles is representing a whole day's worth of action. So we're talking about 4 or 5 major markets being open. Everybody is getting their say into which way the euro USD is going. And after a week's worth of action, it's certainly not looking like it wants to go up. In fact, the wicks are indicating that every attempt to move up has been fraughted very, very quickly by the sellers and pushed right down. So you can see the wicks are all higher up above than they are below. Straight away, we're getting our warning signs that we've struck an area where it's going to have trouble going higher. There's no worries about that. So automatically, we've got a bias to the short. Are we going to go in there and try and scalp it long? No, that's not ideal, because we know that the bigger time frame is telling us, even though we want to trade on a 5-minute or a 15-minute chart, the bigger time frame is telling us that overall the emphasis is going to be on the weakness of the euro USD.
So we continue down in through these charts and we continue coming in through to the 2 hours now, getting closer, more into that day trading type of thing. And I guess when we can start to reassess maybe our levels here a little bit. Do we have other levels of support? Well, I think there's very clear support that we've found a few times here. And again, if you're coming in on a day and you're looking at this and you're seeing, let's say, a closure out here, or especially this closure here, or retest, which is one of our favorites, the role reversal, where supports become resistance, what we can then do is we can start to break it down into even smaller time frames. So we might start now to go to the 15-minute time frame and say, okay, we believe that if price gets through this point, based on those daily rejections Tyrone was just talking about, based on the fact that we know the weekly, the daily, etc., is still in a downtrend, when it closes underneath this little range that it's had, we're going to start looking for heavy scalp short opportunities. Now, one of those will obviously be the role reversal as an opportunity, but also each time it breaks underneath a range. Now, the beauty of being like a London Open specialist is that generally when you see these breakouts occur, is going to be around London Opens or Frankfurt Opens or something like that, isn't it, Ty? On something like the euro or the pound, it often starts its chugging along in the direction of trend around that point. Yeah. I mean, how good is a scalp trade short underneath such a beautiful support? We get one closure underneath and you can see the flow on effects. Now, this is all you need as a scalper.
Yeah, and this is where the party begins, because once you've got that trend established, then every time it pulls back to these key moving averages, it's just short. Short. You're not looking for longs. You're not looking for double bottoms. You're not looking for support unless it's there. All you're looking for is the opportunity to short it every single time it comes up. So again, we can't predetermine when a trend is going to end. All we know is where the trend is going right at the time that you're trading. That's what we're comfortable with. We've got the evidence now that we're short on the euro. Now, if you were just to trade the 20 moving average pullback or the 50 moving average pullback on this particular trade on a 15-minute chart, we already know that daily was giving us a signal. You know, I can see there's 5 trades there already that you could have taken all of them. Did you want to take that top one and just ride it all the way down? Well, you could, but that's not really scalping. Again, what scalping is taking those short and sharp moves, but look at all the entries you're getting, and that's the whole point. Don't forget, scalping is a high volume way of trading. You're not trying to put one trade on one scalp a week. Generally, most good scalpers are probably putting on, you know, potentially a dozen a week, if not more. Look at all those opportunities, and you're only talking about a matter of days here. You're not talking about, this is just August, right? So, and all of these signals though came from the bias that we have on the daily, and that's what we're talking about. That's why it's so important that even though these signals are giving us the entry points on the smaller time frames, we've got our overall bias from the big one, and that's what's really important.
So we've got a question coming in here, and just while I'm answering this question, Ty, I just want to make sure that we are very audible and everyone's hearing us clearly. A few people have been, I think, logging out and logging back in, and it's been working fine for them. But could someone just let us know if they hear us perfectly clear? I want to make sure that's fine. We've got a question coming in here from Fong, and there are some other questions we'll answer later. Remember, ask them throughout this webinar. We're more than happy to help. So what we do here is basically a summary, is identify the major support and resistance on the daily time frame. Well, we want to go through the weekly into the daily, into the 4 hour, etc. Then we confirm the trend. Then we find entries on the lower time frame and follow that trend. Absolutely, that's yeah. Follow the trend, guys. Now, because we've identified it on the higher time frames, and you are actually stacking the odds in your favor. You are doing something that I would say 90% of retail traders don't do when it comes to scalping. I've almost met nobody that doesn't start on the 5-minute, 1-minute, 15-minute charts and get excited into trading that way, especially in Forex. Ty, I don't know. Have you ever met anyone? I'm actually struggling. No. I think women sometimes, but not guys.
Yeah, for some reason, women seem to really grasp the fact that the bigger time frames help you. I don't know. I think as a rule, most people start out trading wanting to be in the market for a very short amount of time, and they feel that the only way to do that is to be on the smaller time frames. And look, in effect, actually entering and exiting on the smaller time frames does fulfill that purpose. But what you neglect is the bigger time frame direction. And I think that's what we miss at the start. Don't take us wrong. You can trade on a 5-minute chart and a 15-minute chart very, very successfully if you understand what's happening on the bigger time frames. There's no problems at all, but it's not a great place to start if you haven't worked down the different processes. So once you understand those processes and you know what to look for in the bigger time frames, you can go right ahead and get onto the smaller ones, and then you can actually do exactly what you intend to do, which is be in and out of the market fairly quick. So it's a really, really good way of trading, but you've just got to understand it. Look, and while we're talking about that, look, we'll have there's a question here about how do we manage risk when scalping from Jacob. Jacob, we manage risk in the exact same way no matter what we're doing, whether it's long-term trading, swing trading, or scalping. We always only risk a very, very small amount of the account, and it's probably never more important than when you are actually scalping, because as you could probably work out, when you are actually having a lot of multiple entries, when scalping is a multiple entry type of system where you're going to put on not just one trade, you might have 6 or 7 trades in the one move. Inevitably, one of them is going to fail, or some of them may actually fail you. So you need to be prepared to be able to only be risking a very small amount. And also, most of those trades, scalping is generally going to be in the lower reward to risk ratio. So you're going to get 1-to-1 and 2-to-1 trades generally as a rule. So you want to keep your risk rewards very, very tight. We always go by the rule. The 1% rule works. We preach it. We do it in real life. We do it everywhere. In our client accounts, we do it in our own accounts. It's the easiest way, and I know it sounds mundane. I know everybody talks about it on the internet. It's blah, blah. It's there for a reason, right? Because realistically, if you're only risking 1% of your account, it takes an extraordinary amount of really bad trades to put you in a position where you can't recover. And that's probably the point. You know, you don't want to be risking enough where you could go through a bit of a bad patch and all of a sudden you can't recover it. Then you start to make mistakes to try and recover. So 1% is always the best way. And you know what? If 1% is too great, go lower again until you're comfortable. There's no written rule, but the rule for us is never to trade more than that, because that way you can let the trade fulfill its purpose without actually interfering, because that's what bigger trades do. If you trade with bigger risk, you end up interfering and not letting it fulfill its potential, and you're always going to limit yourself then at that point.
Okay, so let's go through. Not only have we decided how much we want to risk per trade, but then where do we place the stop losses? A question that Tyron and I get asked a lot. Now, I've got some cool little things here I want to show you. So firstly, the first thing I want to say is that if you've already identified a trend and you've said, okay, we're only looking for short opportunities, and I come in and I see this chart, let's just ignore that we haven't seen this yet, okay? Because of course we know what it looks like, but every time I would apply the same kind of concepts. So when we see this and we have lots of wicks, okay, lots of wicks, guys, and we have a very clear level of support, and then all of a sudden on the 15-minute or 5-minute or whatever time frame we're looking at here, it closes below. To me, that's a trigger point for a scalp. We already know the trend is incredibly aggressively down. Overall, it's been consolidating through most likely a session close to a session open, or maybe even a 24-hour period. We can go check that out. And once it starts to open up, especially if that happens during a market open or before a market open, it can be quite a powerful thing. So we might go, okay, let's wait for the closure. Let's wait for the confirmation, because you don't want to be looking back at something retrospectively and saying, oh, well, that doesn't make sense in real life. This has to make sense all the time. So let's say we took a short here. Where would we place our stop loss? Well, Tyron and I would always apply the same kind of philosophy. It would be behind the last swing with a certain percentage above, or we could also place it behind some of these really good high quality moving averages. So we could say, well, the 20 is going around here. This first line is going to be the more aggressive stop loss. The second stop loss that's market adaptive, again, we're placing it behind the swings, would be here, which would also be behind the 50, and that would be the more conservative stop loss. And this allows for quick retests and spike highs to not get you as much. So again, it's protecting your scalp position. So we might have assessed here, and this is just a random one, I've just come up with it from today's thing, but this is exactly the same thing that you could apply multiple times over onto different charts. I just saw it here and I thought, what a good one to look at. So we've got here the closure. Now, where do you set your take profit? So as Tyron said before, there's going to be a lot of different ways to set profit. One of them is going to be you potentially just have a fixed take. Now, I don't like fixed take as much because I prefer to be market adaptive. But what I would probably be looking at doing is maybe applying something like a scaling system to your exit strategy. So your entry strategy is you've entered. You've got your stop losses, whichever one you've chosen, and then you've got two options. One option is you take a certain percentage. Let's say it's 20 pips. Let's say it's 50, oh, it wouldn't be 50 pips as a scalp, but 30, 20 pips, something like that. Now, if that's your fixed, then you can do that. But because we know the trend is a little bit longer, potentially you could also take off maybe 2/3 of your order at these points and leave 1/3 on. And what you're basically doing there is, because you know the dailies in your direction, you might actually be able to benefit from your next big support resistance level. Now, we know that's down here because we drew those and we could easily have drawn those before. Now, that's when you get monster payoffs from your scalps. It may be a trading style you want to bring in, but this is the beauty of scalping, isn't it, Ty? There's multiple ways to play the entry and, more importantly, the exit strategies.
That's right. And if you're in absolute doubt and you've got no idea, like say the market's going, and an example of that would be a market's fallen through a level that it hasn't seen in so long that you can't even find support for it if you're shorting, or resistance for it if you're going long. But the problem with those markets as well is they will stop abruptly at some point. The way to combat that is to actually identify exactly where your stop loss is. And the stop loss is very, very important. So you need to put your stop loss in the correct place. Measure your stop loss out and at least add 1.5 to 1.5 to 1 on that stop loss. So if your stop loss is in the right place, and let's just say it's at 15 pips, your take profit would be maybe 20 pips. Okay, so even though you haven't got an actual hard and fast target, if you're absolutely stuck completely and you don't know where to put it, but you still want to be out of that trade in a timely manner because you know it's going to stop at some point, make it at least as big as your correct stop loss, or 1.5 times that, just as a very, very basic rule. It's rare that that happens. Most of the time you will find a level of support or resistance that you can aim for that's reasonable for the time frame that you're trading. But if you ever completely stuck, use your stop loss as your guide. Never put it under your stop loss. So in other words, never make it a take profit smaller than your stop loss pips.
Mm-hmm. Yeah, it's very important that we always look for high risk rewards when it comes to scalping. You want to stack the odds in your favor. So we saw before, basically, we've just seen a drop through a very nice support. That's definitely an entry criteria. But we had to look over that 1 hour, and Tyrone mentioned the 20 moving average, the red line here. And the 1 hour is one of the best kind of like pullback zones that you see happen quite a lot too. And you'll notice throughout this aggressive trend down, the 1 hour has been the entry point each time through this very aggressive period. Now, you might not know straight away that the 1 hour is great. So up here, the 1 hour 20, this might just be, okay, you see it and you think, oh, I'm going to go down to the smaller time frames and figure out, is there a scalp here for me at this point? So you might go back down into the 5 minute, 1 minute, we'll go 5 minute chart here, 5 minute chart, and then we'll scroll over to that point, which is over here. And you might see something that you really like. Now, there's multiple different ways of getting into something, but what I like to always see is rejection candles. So we have some rejection candle wicks here. We have another rejection candle wick here. We have a rejection candle wick here, which is, of course, the famous shooting star or pin bar, as many people like to call it. And then we have another rejection wick here. All at around the same point is our higher time frame support, remember, has been broken through. So this was our higher time frame support. This area or range therefore becomes a resistance zone. And by understanding the candle formations here, which are all wick rejections on the 5 minute, when we see that follow through action, let's say it's here and we see the closure below, we might say, okay, that's on, we're going to take shorts. Now, notice the market comes back and it would get a lot of novice traders. Novice traders would have their stop one pip behind here. Many of you have got stopped by this type of thing, but you should have it a percentage above. So at least give it above that or a little bit more. I would like to put it behind the 50 moving average on the 1 hour, which I know is around here because it's about 200. And then from that point, we would be taking the scalp down. So actually our confirmation would have been here. Now, is that the perfect entry point? It's not going to be the perfect entry point because that would be up, right here. But what you're doing is you're giving yourself enough information, which is rejection, 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 shooting star, follow through, enter, and then of course, stop loss behind up here, and take profit could have been at the lows down here, or potentially leave some on for further movements. Is that a one-to-one style trade? Absolutely. Could it be a lot more? Yeah, it certainly could have been if you left it on and you expected that to be the explosive move. And you can see that explosive move and how profitable that could have been as a scalp entry. Ty, I mean, how much do you like that type of style of trading? Understanding the wicks. The wicks are super important, aren't they, on the scalp?
The wicks tell you everything you need to know. It's reading candles and reading bars is a very, very important part of scalping. You may not understand it right from the start, but you will become familiar with it. But when you do understand the market movement and what the wicks are trying to tell you, it does make trading a lot easier, no matter what time frame that you're on. There's no question about that. Now, just while we're here, I'll answer two very quick questions. This webinar is definitely recorded and it will be available on the Pepperstone YouTube channel tomorrow. Okay, so a few people have missed it if they come in late. Yeah, definitely jump in tomorrow, YouTube at mid-morning Australian time. It'll be in YouTube, and the whole library of webinars that we've done over many years are all there. So you can catch all of them there, but this one will definitely be recorded and it will be there as well. And also in terms of trading platforms for scalping, it doesn't make any difference whatsoever whether you're on CTrader or MT4 or MT5. The chart action is exactly the same. So there's no real difference in the chart that you're looking at. It's going to look the same on every platform that you're on.
That's absolutely correct. So we've just looked at the euro so far. We've obviously looked at the importance of wicks, which I think is very, very key because wicks are showing us rejection levels. Remember, these are showing, if you see lots of wicks around a zone, what's that telling us? The sellers can't wait to get in this market. The buyers are trying to push it through, and then the seller's like, no, 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 no. Every time they're like, no, 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 no. And this leads all back to what we were talking about on that daily. Remember, part of the reason we like this this opportunity to go short so much, an opportunity to get into the scalps, was all the rejection wicks around here. Not many people understand that multiple wicks in a location is so important. It's showing that buying pressure. Just like over here, multiple wicks towards the buy side, all of a sudden it did actually counter trend there. Do you want to take that one? it may be a bit more advanced technique, but over here, very easy. I mean, the trend's still down overall, higher time frames. Over here, very easy, sell. Lots of sells, and a very important zone. Now, you might say, well, what about right now, Tom and Ty? What about right now? Well, you'll notice we've hit the next level of support. We've exactly moved into that over the last couple of days. And this is where you generally expect the market to start to consolidate. Now, if it gets underneath this zone, so we see some consolidation here, Ty, and then all of a sudden it goes underneath that, will the trend be to the next level? I mean, the next level's over here. What are your thoughts there, Ty?
Yeah, it makes a lot of sense, doesn't it? Now, I know you're probably looking at it now and you're probably thinking to yourself, well, I can see why you've drawn those lines there now, and I can see why the market is behaving that way. We haven't just picked the euro for this, okay? This does this on basically every pair that you can identify, every stock that you can identify, anything you can trade, actually, you will see these levels. So it's all about actually understanding where those levels are and marking them up. And again, this is why we go to the bigger time frames, because sometimes on a smaller time frame, you just simply won't see these levels. Okay, so it's really, really important to go from the bigger time frames down, and then the levels are there. What we often do, especially when we're teaching new traders to trade, is actually get a color coding system for the levels. So if you identify a level on a weekly chart or a daily chart, you make that one color. So when you know you go back to a smaller time frame and you couldn't see any touches of that level, but you do see the line, you know where that support is coming from or that resistance is coming from. And of course, if it's a daily or a weekly, you know it's very, very important.
So as a scalper, because we've come to this level of support now, basically you might become neutralized. So what that means is that you don't necessarily love the buy or the short at this zone. You've hit your key level of support, and maybe it's now time to move on to your other FX major. So it might be the pound US dollar, it might be the euro pound, it could be something else, because you've effectively hit a very key level of support on the daily, and you don't want to necessarily get caught up in the chop. You want to be getting those explosive scalps in the direction of trend. That's the ideal. I mean, it's ultimately everyone's favorite thing to do, Ty. You get in, you have a very tight stop loss, you let some ride, you take some profit out, and you get the action from the scalp and the momentum of the market. But would you like the market right here towards the bull or the bear side?
Well, I mean, do you really want to shorten to a brick wall? That's the question, isn't it? Like that's what it comes down to. That's what it is. That is not the ideal. Now, if that market came back up and touched the 20 moving average again and touched that yellow 117.70, is that a good sell zone? Well, that's another story altogether. And that's what we're talking about. That's the quality entry. Not right now. This is not where you want to be shorting. I mean, could it go short? Well, of course it could. Anything could happen. But the likelihood of it happening is what you're trying to identify. We need to see likelihood, high statistical chances that it's going to work. Now, another thing, we have got several questions, actually. I'm going to address them in one big hit, actually. We've got questions asking about, is it worth scalping on zero commission or volume, or should we be worried about spread? Now, when we talk about scalping, when Thomas and I talk about scalping, we're not talking about 1 or 2 pips, okay? So it's very, very important. We need to do, a lot of people actually basket, I call it micro scalping. People go for 1 or 2 pips or 2 or 3 pip moves. That's not scalping in our mind. When we're talking about scalping, we're talking about physical moves of about 10 to 15 or 20 pips. Probably 15 is about as low as we would go. So even though it sounds like a lot of pips, when you're taking those sorts of trades on the majors, which is what we're really talking about, the spread becomes effectively irrelevant. I mean, it's not irrelevant to the point where you can ignore it, but you generally, with Pepper, you're going to get very tight spreads on the majors all the time. So we don't even consider the spread because we know that it's going to be very relative to the trade, right? So if you're paying, say, a one spread, which would be probably quite high on some of the majors these days, that's not going to affect the 15 or 16 pip trade. But if you're going for 1 or 2 pips on a take profit, and that's going to be a stop loss, spread is extraordinarily important. But I would hesitate to to tell you to do that. I would be saying, that's not what we do. We haven't done that in 15 years, and we don't advocate anybody do that, because you are playing a Russian roulette there. All it's got to move is it's just going to spike and it can take you out. So just be very, very mindful that when we're talking about scalping, we're talking about moves that are around 15 to 30 pips. Okay, they're the sorts of moves we're talking about. We're not talking about 1 or 2 pip moves. Just so you're
Look,
aware. I've seen a few
we're not in the
questions.
same
Yeah.
market as we were 10 years ago either, Ty. As you said there, the algorithms are in the markets now. We've got robotic trading, obviously expert advisors in MT5, MT4, etc. These types of things have changed the dynamic of the market from the 1 to 3 pip stop loss TPs. Now, some of you might be doing it, and all credit to you if it's working out for you in this environment, but when the algos are getting hold of something, the momentum moves are short, sharp. They are so fast, Ty, and they are so aggressive that having the wrong kind of mentality and maybe going for 2 to 3 pips, I just don't think it's there as much as it used to be. I think it used to be there, but it's less so now. Yeah.
Yeah, I think that as a sustained model, if you want to become, if you want to trade, effectively for a living or supplement your income and do it, at a more serious level than just having a crack, you need to look at the bigger moves. You're not gonna. It's going to be very, very stressful going for those small time moves. Leave those to the algorithms and the robots to do. We need to stick to the better ones.
Okay, so the next type of thing, Ty, we've talked about moving averages. We've talked about the 1-2 kind of system where you find a higher time frame moving average, and then you start to break that down to the smaller time frames, see rejection candles, see hammers and pin bars, the basic 2 types of candles many people like, engulfing candles, all these types of things, and getting in on that trend action. But what about when we're in a range-bound market? What about when the daily is sitting there and it's going between 2 different zones, or the 4-hour or the 2-hour or whatever it is? How do we trade that? Well, we don't have a full ability to go through that on timing today, but of course this is in our course. And on top of that, if you understand channels as patterns, and you understand how channels work, of course you would be looking for, if you found a 1-hour channel, you would be looking for buys on the lows, sells on the highs, and if it breaks out as a scalper, you need to have that mentality, switch your system. You got to switch straight away to the opposite of a channel. So generally with channels, you're buying and selling the tops and the bottoms. But when it closes above or below, Ty, we've got to instantly say, hey, we've got to change our system and we need to look for a buy straight away. How many times have we switcherooed during the London Frankfurt session opens where we've had a short in, it hasn't worked out, the close has happened, and then we've had to go smash buy. Now, it may seem like revenge trading, but it's not, because you recognize the channel. Very different.
That's not revenge. That's actually trading on your feet. And what that is, as a small trader, as a retail trader, we have the advantage that we can actually do that. Okay, we're putting in positions that we can actually effectively trade what the market's trying to tell you. It's no point fighting the market. If it wants to go up and it wants to turn around, get in there and do it. Yes, it's going to cost you 1% if you got the first one wrong, but after that, you've started an established new trend, and you could potentially get the next 3 or 4 right. But if you fight it, you're going to give away 4 or 5%. So you never fight it, and you're able to. We've got the ability to be very, very agile. So don't fight the market. Trade with what the market is trying to tell you to do. It's really, really important.
Another thing I want to leave everyone with as we answer the questions here, Ty, is never think that every single day is a great day of trading. Even with scalping, not every single day is a great day. Now, if you saw this type of opportunity and you had resistances here on the 4-hour and you had that becoming supports and you were in here on the 5-minute chart, every time it's around this zone, yes, could be very, very good profitable trading opportunities. But when you're seeing it up here, let's say at the start, you might say, well, it's not for me today. Not every day is great. There's multiple great things here, but not every day. And I think that's something that a lot of, again, retail traders can't get through sometimes their minds when it comes to scalping. Now, there are a lot of other patterns that you want to learn on the higher time frames. These won't work as well, though double bottoms and ascendings may work quite well in scalping. Flags, inverse head and shoulders, these types of things to understand trend. You'll also want to bring in some things like stochastic indicators. We've done plenty of webinars about this before. You can check them out on Pepperstone's YouTube channel and definitely check those. And of course, then we've got all these different indicators that you can start to bring in. Some of the market conditions you want to be aware for, please be careful around non-farm payrolls. That's something that happened last Friday. It can be very aggressive. We've got CPI today in the US. This is a very important bit of information that's coming out. And also with scalpers, sometimes Monday mornings in the Asian session can be a little bit flaky, I guess I would say, from a scalping perspective. We prefer, Ty, don't we, to see the markets all open, the London, the Asian, and the New York American session all to open, to show us that real trading volume flow And of course, more importantly, we're going to see, and this will segue well, we're going to see that high liquidity, because for anyone that was watching gold and silver during the Asian session on Monday, whoa, that was nasty, wasn't it?
Oh
We
yeah,
want to be in high liquid times, high liquid.
yeah, most definitely. Now, very, very important. And those, and like I said, when you're doing those, you don't want to be FOMOing, of course. We saw the FOMO graph there. You can watch that in the. It's one of Thomas's favorite charts.
Oh yeah, I
Yeah. So
didn't bring the FOMO. There we go.
yeah, you don't want to be FOMO. They're all the emotions that a scalper will feel, especially a new one that's first starting out to trade. Avoid them all. Avoid every single one of them. If you're looking at any of them, put your charts away and come back tomorrow. Okay, so
I don't mind the thrill, Ty. The thrill is pretty good. No. We don't want to go through any of these, and especially the depression one, Ty, or the hope.
No.
Don't want hope or depression or desperation or panic. Any of these ones are particularly bad.
The minute you start hoping, you are in trouble. So now we put together a 50% off offer on the course. A lot of the course material really goes into what we talked about tonight in a very, very in-depth method. So it's a very, very popular course, very big course. Thomas has put together a special for Pepperstone for the month of August. So I've popped that link in the chat room. So for anybody who's interested, it's a big discount off. It's 50% off at the moment. And if you decide that you're going to come to Cairns for our conference, we're hoping that our conference takes off, because as long as the lockdowns go away, we will be in Cairns doing our first ever FX Evolution conference. So we're going to have Chris Weston there from Pepperstone presenting, and we've got it's going to be an amazing event. But if you haven't done our course, you definitely want to be doing the course before you actually do that, because you'll get so much more out of it. So the link is in the chat room. But of course, if you have any questions at all, you can email your Pepperstone representative, and we can help with any questions that you might have on what you learned tonight.
Now, speaking of Chris, Ty, great thing Pepperstone's doing is not only do they have great webinars like the one that you've just seen, hopefully you guys enjoyed it. There is I believe, a Q&A at the end if you want to put in some details there about how you found it. But also we've got Chris Weston doing a weekly YouTube Good as Gold event. Now, I've posted that link as well. Plenty of links, that link as well for YouTube. And you can check that out on Pepperstone's YouTube. I believe he does it once a week. Gold, very volatile right now. Lots of trend that just came into it to the downside, which obviously created some pretty crazy scalp opportunities. And hopefully now we see some stabilization and then some resumption of new trends. So that would be really sweet. But I think one of the things we always want to do here, Ty, for everybody is we want to understand, yes, we've got a course. Yes, we've spent 10 years, 15 years, each combining our knowledge to really bring this to the best possible. But you want to try to build a business strategy out. We talked about those emotions. When it comes to scalping, please have a game plan, whether that's a tick box laminated on your in front of your computer, where every single time you tick the boxes of the things in your strategy and then you make sure that you do it, whether it's detailed reporting. If you don't have a business plan for your scalping, it can get out of control, and you'll wake up the next morning after having 2 hours sleep red-eyed, and you'll have a disaster in your account. So please be aware, this is high frequency trading. You can often be trading multiple times per day, ideally not 20 times. And if you don't have a business plan like our Pressix system or something like that, then it can do a lot of damage, can't it, Ty?
We've been there, most definitely. We've been there. We know it, and we want you to avoid it. If you've enjoyed what you've seen tonight, please fill out the survey and help us bring better webinars to you. Pepperstone are very, very interested in your opinion, so we can bring you the best webinars that are going to give you the most amount of information, and of course teach you the way to really be a good and profitable trader. If you want to join us for our live webinar that we're doing in about 10 minutes, we're analyzing the markets in a very similar way that we did here, but of course the live markets in our own webinar. So I'll post that YouTube link in the room as well. There is plenty of links tonight, but that webinar starts in 10 minutes. It's perfectly free to jump in, and you'll see us analyze the live charts in a very similar manner, talking about effectively the same thing we talked about tonight, because that's how we trade. That's how we've done it for a very, very long time, and we do it that way because we know it works. So look, thank you very, very much for joining us. We really appreciate you coming and giving us your support. Hopefully it's been of a good benefit to you. If you missed any of it, jump into the replay in the Pepperstone channel tomorrow. tomorrow. And of course, if you want to see some of the other concepts that we've talked about, just go through the back catalogue of Pepperstone webinars, look for the FX Evolution presented ones, and you'll see basically a topic on nearly everything that we've covered. There's swing trading, all the indicators. You'll find something. There's a lot of information there. And don't forget to check out the Telegram for all the live information for Pepperstone as well. Thanks, everyone, and we'll see you in a couple of weeks.
Thanks so much, everybody. See you soon or in a couple of weeks. We hope you enjoyed. Bye for now.